Welcome. Our next panel is China's Economic Outlook, Issues and Policies. So my task is to introduce Bob Rubin. We could probably take a good hour to do that. I'll skip over some of the many highlights. Bob began his career in finance at Goldman Sachs in New York City in 1966. He held a variety of positions there, including serving as co-senior partner and co-chairman from 1990 to 1992. He has also had an extraordinarily extensive career in public affairs. In 1993, he was the first director of the National Economic Council. In January 1995, that was for President Clinton, he was appointed as a United States 70th Secretary of the Treasury, serving for 4.5 years, involved in many critical policy issues and financial crises in that period. And then from 1999 to 2009, Bob served as a member of the board of directors at Citigroup and as a senior advisor to the company. Now, in this period, Bob's career also took a little bit of a sideways turn. He started the Hamilton Project, which is an economics research group that offers a strategic vision and produces innovative policy proposals on how to create a growing economy that benefits more Americans. It's a fabulous organization that Bob helped start. The left turn was, at some point in that period, he hired me as the executive director, and it was really a terrific highlight to be able to do that job. I learned so much about economics, economic policy, politics, and management, and learned that as soon as Bob says, well, you know, I'm just a retread lawyer, you know he's about to say something you should listen hard to. I should, you know, there are several things I learned from Bob in that period. One of the favorite ones that really stuck and that I've tried to apply in many facets of my life, even including with our children, sometimes somewhat unsuccessfully, is that Bob has a theory that you should treat people like they're the client. And so in general, I try to do that. Again, with our children, it can be a little complicated to do that. In addition to all that, he's a chairman emeritus of the Council of Foreign Relations. He's a member of the board of trustees at the Mount Sinai Health System and chairman of the board of the Local Initiative Support Corporation that does very innovative local economic development policy. And he's been on the member of the Harvard Corporation and is now a member of its finance committee. He has many degrees from Harvard and Yale, and several honorary degrees. So I'm about to turn it over, but I just want to make one last point. This incredible career that Bob has had reflects his brilliance, but also reflects a very wise and excellent judgment on many things. However, I think it would be a mistake not to highlight one area where Bob's judgment continually fails him. And annually, Bob and I engage in a bet between the New York Knicks and the Chicago Bulls. He likes the New York Knicks. His judgment fails him there. And every spring, it's wonderful. I send him an email, and he sends me a $100 check. And this year, I think in an effort to try and make up for several years of losing, we have $200 on the line. So with that, I will turn it over to Bob.
Thank you, Michael. I told Michael that it seemed to me there was a question of character here with respect to Michael, because we do have a bet on how many games the Knicks will win this year. And 2 days after that bet was made, one of their key players got badly injured. So I expected Michael to call me and say, well, we obviously have to revise the terms of the bet, given what happened. He has yet to call. On the other hand, he pointed out to me that when I was at Goldman Sachs, and I was there for a long, long time, we never revised anybody's contracts if the conditions went against them. So that was probably a fair comment. Okay. This is a really complex time with respect to the future of China. I had the opportunity to be the luncheon speaker at the China Development Forum about, I've forgotten now, 6-7 weeks ago, whatever it was. And certainly one impression I came back with is that the outlook with China, Chinese policies, the issues facing China, it's just enormously complex and vastly important to Americans. American businesses, American investors, American citizens, American policymakers. So, in that context, we are fortunate to have three extraordinarily well-qualified individuals to help us think our way through this. We have Yiping Huang, professor of economics, the National School of Development and China Center for Economic Research Peking University. I'm not going to do more than identify the various people because the resumes are in your materials. I won't read from them. But I will say with respect to Yiping that it is really I'm enormously grateful to him for having flown from Beijing just for this, and he's going back to Beijing tomorrow. And I've known him for a long, long time, and he's enormously thoughtful analyst and commentator on affairs in China. We have Brad Stetzer, who was described at the Council of Foreign Relations, who was described in the New York Times the other day as a leading authority, or the leading authority, I don't remember which, but in any event, one or the other, on Chinese financial flows. And we have your own Anil Kashyap, who's professor of economics and finance at the Booth School, and I saw described recently somewhere as the leading authority, I think, though that also may have been a leading authority, I'm not sure, on the Japanese financial system and financial systems more generally. Okay, we have a very limited period of time in which to go through a lot of issues, so what we'll do is we'll try to focus on a few key issues with respect to trying to better understand what the outlook is for China, both in the short term and the long term. Let me start with a broad question, and maybe, Yiping, it'll be appropriate for you to at least provide the first answer to this, which is the United States is a market-based economy with a government performing various functions that the markets won't, and there's always this debate, what role should the markets have? But anyway, that's the kind of system we have. How would you describe the structure of the Chinese economic system in that context?
Relative to the free market system in the US?
Yeah, in contrast to...
Well, I think the easiest way to look at is it's a transition economy. At the same time, it's also a developing country. We just had a debate. I'm not going to get into that.
Okay.
But it's a transition economy moving from a centrally planned system to a market system. The difference, I think, for China compared to many other transition economies, China adopted a very gradual transition approach. So it was not like a big bang approach and you move to a free market system overnight. There could be a debate which approach worked better. My own sense is the gradual reform approach probably did better, partly because it helps to maintain some economic social stability when the transition started. So you don't overnight privatize all the SOEs and get rid of the central planned system and hope that tomorrow the free market system would work, and that doesn't work in real world. That's why the Chinese approach works better. For 40 years, the growth rate was on average above 9%, and I think that's an important point. But there is a drawback. The gradual reform approach also means a lot of leftovers from the older system will continue to exist, and they don't go away like easily. I think compared to the US system in terms of economic policy, economic structure, two things stand out. Number one, the government probably intervenes a bit more than other market economy in economic activities. And number two, the state sector probably plays a greater role in the overall economy. But I think we should think of these issues from two perspectives. Number one, as I said, this is still in the economy in the transition. I think the overall direction is that we're probably moving toward much more market-oriented system going forward. The second point, I think, when we look at China, we probably can also think of some other economies that we're familiar with before. For instance, we're talking about the SOEs, the state-owned companies, and looks like they're very strange animals. But you think about France. They also have a lot of SOEs, Singapore, and so on. And government intervention. Yes, China, the government intervenes in activities probably a bit more than many other market economies. But think about Japan and Korea in the early stage of development. So the point I want to make is it's a transition economy. There are some unique features, but partly because it's in the transition process, but also partly I think it's not that unique when we think of some other economies like France or Japan I mentioned earlier on.
Yiping, let me ask you one more question. Let me see if Brad and Neil would like to chip in. What you say is that it's in some sense moving toward a more market-based economy, albeit gradually. But I had an impression, which may be wrong, that more recently, say the last couple of years, 2-3 years, there's been a constraint of credit to the private sector, an expansion of credit to the SOEs.
Right.
China 2025, although we will get into that later, I guess, doesn't sound like it's a market-oriented program and so forth.
Well, I mean, I would say at the moment, I can't argue that private sector and the state sector are exactly equal. So I think we're still in the process of creating a level playing field on the way. So some kind of this policy discrimination against the private sector still exists in many ways. But the reason why the private sector felt like seriously hurt or hit by the policies, to some extent, I think it was kind of accidental. You look at the recent policies in 3 areas the government has been implementing. Number 1, reducing pollution and clean up the environment. Number 2, reduce excess capacity in some industries like steel, aluminum, and so on. And number 3, deleveraging, dealing with the systemic financial risk and so on. These were the policies as economists we have been recommending the government to do for quite a number of years, because we think that these are the necessary policies to improve the quality of Chinese growth and make it much more sustainable. But think of the policies in all these 3 areas. Just very unfortunately or accidentally, they hit the private sector, SMEs, much more than the state sector. So I think I don't want to say there's no discrimination, policy discrimination against the private sector in the Chinese economy. But recent pessimism was in part caused by these probably good policies, but they just disproportionately hit these the SMEs and the private sector. Most importantly, the style of the government implementing the policies, the so-called go-stop policy fashion. Either they don't do it, or if the top leaders become serious, they all do it, not just 100%, sometimes 200%. That's why we are really seeing almost like damages to the private sector. I think that's something we need to put into perspective. And one final point I want to make. After the global financial crisis started, there was also a debate about the state advancing and the private sector retreating, because government stimulus policy mostly went to the state sector and the private sector actually deleveraged. So people became very pessimistic. But you look at the data, macro data for the last 10 years, you would actually find the private sector's share in economic output, in total profit, in credit, in employment, and in innovation during all those 10 years still was on the way up.
And you think 5 or 10 years from now, Yiping, that there may be a little fluctuations, but that basically that's the trajectory you're on? I
think people realize the economy now faces a big challenge of how to continue the growth, and we discussed the so-called middle income trap question, which really means whether or not we can continue growth depends on our capability to innovate. Guess what? Innovations are mostly done by the private sector, and the policymakers realize that point.
Brad, 2025, which I think you focused on some, is that consistent with the perspective that Yiping has just set out? Well, let me be more specific. I mean, you've got what seem to be at least substantial protective measures for certain industries, basically AI and the like.
I mean, I think China 2025 is a vision that at its heart is based on state-led industrial upgrading. And I would put a lot of emphasis on the state-led part. It is based on large subsidies, both direct and through the banking system, to facilitate the development of Chinese companies in cutting-edge sectors. AI gets a lot of attention, but you can think of China's desire to become a player in commercial aviation, which is very state-led. There are enormous funds made available at almost every level of China's government to develop an indigenous Chinese semiconductor industry. There's a strong desire that medical equipment now be made in China, including the top cutting-edge medical equipment. In each of these quests to raise China to the frontier, the state is, I think, playing probably the central role. And the state is playing a central role in creating the companies in many cases, the aviation industry. But the state is also in many ways seeking to guarantee a market because China is China. Who buys airplanes? Well, I think almost all the major airlines are owned by China's government. And so it is quite easy for informal preferences to be given. Who's typically the biggest buyer of medical equipment? Hospitals, which are reimbursed to some degree by the state. So I think China is playing both a role in, the state is playing a role in creating these industries and leading the development of these technologies, but also in assuring a market for Chinese innovation, Chinese technology, in a way that feels like it tilts the playing field.
It feels like it, yeah. And I gather that's associated with Buy China mandates.
I'm informal, but effective.
Informal, but effective, right. There's an interesting question, Brett. I was up at Harvard last week, and I moderated a panel on this, on trade issues. And one of the questions that was raised was, is this approach, which is basically exactly as you described it, a state-directed approach with all the dimensions you said, is that a better approach economically than our more market-based approach? If it is, should we move away from being the market-based economy we are and adopt these kinds of practices for these purposes? It was just a question. Or if it's not better, then is China making a mistake going in this direction? And is there some kind of a strange variant of externality buried in here that we're not identifying?
I think it's a separate question about whether it works for China and whether it would work for the United States. The unique, that's a dodge, I realize, but the unique feature about China is that it has such a large domestic savings base. It generates such a large flow of new funds for investment that China in some sense can afford to make a lot of bad investments. And in a way that I don't think the U.S. can.
Well, I think, I very much agree with his assessment about government investment might not actually lead to very successful results. Government-directed investment could lead to some result. Even during the central planned period, our government spent lots of money and sent the satellite to the space. But that was very non-commercial, and you just mobilize the whole country's resource to do one thing. You did it, but you would not be able to have any economic meaning. The same, I think, is debate is happening inside China. What kind of industrial policies should we apply? And in fact, one of my colleagues, Professor Justin Lin, former chief economist at the World Bank, has been leading this debate. And there are lots of discussions about this. My own sense is, well, number one, Made in China 2025 so far is more like a vision than a very well-designed policy. A lot of detailed elements is still yet to be worked out, and that's why we're having a lot of debate. But I would not be surprised if the government put together a massive program and spend lots of money to promote some industries. Problem is this, two colleagues of mine at our school just completed a study looking at the effectiveness of government subsidy to innovation, corporate innovation. And certainly they found the majority of the government subsidy went to the SOEs, state-owned companies. But as I said already, majority of the innovation is done by the private sector. If we just look at, for instance, domestically granted patents, 70% of the patents were created by private enterprises. 25% were by foreign enterprises. Only 5% were created by SOEs. So my point is, well, number one, I don't think if the government repeated what they did before in terms of supporting industry, that would be very successful anyway. Because
you think it would be or wouldn't be?
I don't think they will be successful. For that same reason, I would recommend the government if they want to do it. I mean, I think industrial policy is useful and important, but you probably should spend more money in supporting the basic research. You can also promote industrial upgrading, but without limiting competition. So for instance, in Shenzhen, a southern city in China, they're doing much more wisely. They're putting together some funds, promoting some investment in research and development, but they have kind of like an open bidding system, and whoever wants to do the project can come forward and get the money. While traditionally the Chinese government sometimes just identify the companies and give them the money, I think that already has been proven many times that did not work.
We're going to get to the financial system in a moment. I know Anil and Brad both, I'm sure, Yiping as well, have a lot of comments on that, and that's gotten a lot of attention. I actually have a little trouble understanding what the issue is there, although we've talked a lot about it in various panels and one thing or another, but we'll get to that in a moment. But let me ask you this. Stepping back and just looking at everything that one can think of about China, what do you think the long-term trend rate of growth, and let's call that 10-year rate of growth. You can do anything you want, but let's just take 10-year. Long-term trend rate of growth is for China, and what is or what are, whatever, the risks that would most trouble you about investing in China? Anil?
Well, okay, so one challenge is to reconcile personal freedom with economic freedom. So if they're going to move towards a more market-oriented economy, there's a question as to how far you can get if you're going to maintain control at the center. And I think that's the fundamental challenge that China faces. If you think that the government wakes up every day and has a first thought, will I be in power tomorrow? If the answer is yes, then I go on promoting the market and everything else. But if there's any doubt about sustainability, all bets are off. That's my model of what I think how they operate. That creates limits. So growth can disguise lots of weaknesses. When you're growing 9% a year, there's all kinds of things that can be covered up. And China can still grow pretty fast, but just off of demographics, we know it's going to slow to some extent. And the difference between slowing to 5% versus 3.5% is just massive. And so that's why the stakes are big now, I think, and whether or not they're going to make choices that are going to be more friendly to the 5% or 3.5% is going to be a big challenge.
And in a word, Neil, using the framework we just heard articulated, what kinds of choices would lend themselves
well, I think
more to 5 and what more to a 3.5?
A big risk will be how much do you let the private sector do what it wants. If every time there's a slowdown, you're going to turn around and just prop it up with the way you know how to do it, that accumulates an allocation of resources in the wrong places. And when you're growing at 9, it doesn't matter so much. When you're growing at 7, it's not so easy to see. When you're growing at 5, that's the kind of difference that can push you down. And I think we haven't seen that test yet, but it's coming.
Brad?
And I guess, to state the obvious, I think there's a consensus that China's labor force has basically peaked in size, which implies some slowdown in the rate of growth. But China is still a developing country, although it embodies within it centers or port regions that are much closer to the income level of advanced economies. But there's clearly scope to catch up. And that scope won't be exhausted in 10 years. So I think, a realistic expectation would be growth in the 4 to 5%, which would be fast for an advanced economy, but it's slow relative to China. The big risk, I have a slightly different risk. I completely agree that the balance between the market and state could disrupt everything. But I think there's also a challenge in creating a more sustainable macroeconomic equilibrium. What's striking to me is that China still saves, according to the IMF, 45% of its GDP. That's down from 50, but a sustainable level, a high level of savings is something more like 35% of GDP. And it is just a fundamentally difficult challenge to sustain consumption growth with that level of savings.
I think that's not disconnected from what I was saying. I mean, part of it is if the state wants to mandate growth, the way to do it is to push it through investment, and you need the savings. And if people are worried about whether the social safety net's going to be there and all that, you can reconcile these things. But I agree, the rotation towards a consumption-based or consumption-led growth requires these changes, and it requires potentially taking risks to give up control. So,
I remember when we were meeting with Jurangi a long time ago. This is when I was still Treasury, and he said, what we need to do is become more of a consumption-led economy. I could be wrong, but my impression is not much progress has been made in that. And what kinds of policies might the government be thinking of adopting that would get them further along the track?
Well, consumption actually now is the key driver of Chinese economic growth. You look at, before 2008, we had an economy which was growing on average close to 10% every year. But imbalance problems were very serious. Too much investment, too much exports, consumption was relatively weak. One of the reasons why consumption was weak was because household income was growing relatively slower than GDP or national income. So consumption cannot grow faster than GDP. That's why consumption share, aggregate consumption rate share of GDP dropped from 62% in year 2000 to 47% in year 2010. 10 years drop by 15%. There are some other reasons people talking about income inequality. So rich people have too much money and their propensity to consume is relatively low, but poor people do not have enough. And the second reason is the so-called very poor social security system. So if you have income, you save a lot because you're not sure about the future. But after 2008, in almost all these directions start to change because number one, wage rates increased quite dramatically. In my hometown, which is not far away from Shanghai, a migrant worker would earn something like 1,000 yuan 15 years ago, and now they earn 6,000 yuan a month. I mean, you can see within 15 years from 1,000 to 6,000, that kind of increase in labor cost, number one, means export competitiveness was seriously hurt. Investment return was squashed. But household income increased and income distribution improved because poor people rely on wage income and rich people depend on investment returns. So in fact, if we look at the changes after 2008, two things. You saw quite a contrast. Before 2008, growth was very strong, but the economic structure was so imbalanced. In fact, our former Premier Wen Jiabao once said, this structure, this growth model is so uncoordinated, imbalanced, inefficient, and not sustainable. Look at what happened after 2008 now. Growth is coming down, and in fact, we still don't know where the bottom is. Economists and officials often would say every 2 quarters, growth would bottom next quarter, but after bottoming, growth could still go down, and at the moment it's still weakening. But the second change is the economy is also rebalanced. So for instance, the current account surplus, which was like 12% of GDP in 2007, last year was only 1.4%. And the first half of this year is probably almost zero. So consumption is much more stronger now, partly because household income is growing faster, and partly because income distribution is improving. And finally, I think social security is probably better. Not too good, but it's much better.
Yes, Brad.
Can I jump in here with some data points that I like to highlight? I just checked the IMF Article 4 to sort of make sure I was right. I think China collects in personal income tax about 1.5% of its GDP, which is a very small number. As a result, the central government doesn't have the resources to play some of the roles that the state plays in the United States. It provides very limited transfers to low-wage workers, unlike the US, where we have an earned income tax credit that raises incomes above the market level. And then it just doesn't have enough money to spend enough on public health. public health spending as a share of GDP is around 3%, which is just too low. So there's, I guess the optimistic way of phrasing
Ours is too high. Go ahead.
is that there's a lot of scope for China to take policy measures that would make a real difference. The personal savings rate is about 1/3 of all income, and even the poorest cohorts in China have a very substantial savings rate. The other point I would make, and may lead to something that Anil wants to discuss, is that I do think that while China has made progress with external rebalancing, it did so at a cost. It raised investment, at least initially, after the global crisis, above the already high levels of the pre-crisis period. And depending on how you want to do the accounting, at least if you accept the IMF's notion of the broadest possible measure of the fiscal deficit, and the Chinese government uses a much narrower measure, the fiscal deficit that is supporting a lot of this investment is 10% of GDP. And so there's a sense in which the rebalancing that reduced the external surplus hinged on creating some of the internal imbalances, the excess investment, an unsustainable debt path that are worrying. And so therefore there's a sense that China still needs to do more in order to really put its economy on a stable footing.
Well, that leads us to something that we were going to get to anyway. We'll do it now. When you talk to people I was in an investment committee meeting earlier this week of a very well-known organization and institution, and they were talking about what they should do in terms of allocating to China, and we were discussing what kind of issues we are now, and financial instability came up. And here's something I don't, well, let me break my question into two parts. One, which parts of the financial system are people most worried about? The wealth management products, the off-balance sheet instruments that are being used by local governments. I forgot what they're called, but that's what they are, off-balance sheet instruments. Is it the provincial banks that are being aggressive? Is it the Main Street banks? I mean, yes, the state-owned or state-controlled, at least, banks. But the question I don't really understand the answer to, although Brad explained it to me the other day, I still don't understand it. Say that debt is 300% of GDP in China, give or take, total debt, including the financial sector. If you start to have default, and say that much more of it than here has been used for projects that may not be sound. I don't know if that premise is right, but let's assume that's right. Why does it really matter? Because in a state-directed economy, the state, if there are substantial defaults, can prevent the default by bailing out. Then you have a moral hazard problem, but then, since the state has great power in China, they can simply say, going forward, people who lend or borrow irresponsibly will be subject to civic and maybe even criminal penalties, in which case you might solve your moral hazard problem. Anil.
Okay, so home court advantage. I have a picture, if you can put the slide up, to try to get at this. So this, I should say, I'm speaking on my own personal capacity, so this is not an official view of the Bank of England, where I have a part-time job. But this chart has been used by people there as well. So this shows you the credit boom in China in perspective to several ones that ended badly. And you can see that China has been taking on debt at a pretty furious rate, a big acceleration post the financial crisis and the surge of debt. It only goes to 200 because this is private, non-financial debt, so it takes out the corporate side. If you go to the next slide, you can see why people worry.
I'm sorry, it takes out the corporate side or the banking side?
That was just to corporate, or private, non-financial debt. So there was no within financial sector debt. So the reason why people worry about this is...
And does that have I apologize, but does that have the local...
all private
municipal debt in there?
No. So it would be it would be all debt that's issued by the private sector. So if there were local guarantees behind a private thing, it'll be in there. If it was, and that's how most of it ends up working, I think. But the point is, so here's growth, and you look at China's been growing like a rocket forever. Here's, you can see, kind of 6% a year for the last 5 years. So that's all post-crisis. Look at their trajectory relative to all those other countries that when they hit the same debt level, kind of collapsed. So everybody else that got, to kind of 200% debt to GDP course, sample selected. There are a few cases where people have gotten that high and not tipped over, but by and large, they're into unprecedented territory. So this is the GDP path, and you can see stagnation in all these cases. China's now reaching the level of indebtedness that the others do. I share your view that they can prop it up if they need to, if things turn out bad, but the difference between having to prop it up and just pouring debt in probably brings a growth slowdown. And whether or not you can have political stability if growth stalls, and that's what they're doing, is, I think, the big risk. I mean, they'll be able to paper it over. It's just a question of if people now suddenly say, wait, we're growing at 3.5%, my income's going to double in 25 years, my kid's outlook is completely different, that changes the conversation in my
Okay, but in the risk of sounding dumb, Neil, let me ask you this. Why would it necessarily result, and I sort of, Yiping was agreeing with you by nodding his head, but why would it necessarily lower growth?
Because I don't think
You're worried about allocation of capital?
Yeah, I think you basically
Yeah, but then what about my point, that in terms of allocation of capital, you can simply say moral hazard. Going forward, anybody who makes a bad loan, whoever does unwise lending or borrowing is going to go to jail.
They could try it, but they're the ones that are giving out the bad loan. I mean, they're not going to jail themselves.
Well, that's a problem.
I think part of it is the way you keep people employed and the way you keep harmony is you keep putting money into where you can put it in. And Yiping probably can say better about all the different ways that you can push credit in to prop things up.
I actually agree with Anil on this particular point. I also agree with you. I think probably at the moment, the very high leverage ratio is the key concern now for China. And the reason is because it's just too high. The number I look at is the so-called ICO, incremental capital output ratio, that measures for producing one additional unit of GDP, how many additional units of capital input you require. And that number was 3.5 in 2007. Last year, it became 6.3. So which means over time, the capital efficiency has been declining very steadily. I agree with you. The high leverage ratio in China doesn't necessarily means we're going to see an imminent so-called Minsky moment, the collapse of confidence and the collapse of the debt market. I think you're exactly right. The government, in fact, what you find is the most heavily borrowed entities are number one, state-owned enterprises, and number two, local government entities. So these are the state-owned entities one way or the other. And the money mainly from state-owned commercial banks. So I think that can go on for a while. The worry is that money goes to the SOEs, but the efficiency has been declining. So yeah, you can stay on for a very long time. But if that ICO number continue to rise, it means sooner or later there will be stagnation, no growth. That's why I think we really need to push ahead with the reform now. But what people worried after the global financial crisis, and probably also now, is like leveraging up by the state sector, but deleveraging by the private sector. It's a bad progress in my view, because what I call bad leverage is rising and good leverage is declining. But in a way, there's also a bright side of this pessimistic story. First, as I said, we're not going to see imminent collapse of confidence in this structure and can continue for a while. But second, if we can get the reallocation right, in fact, there could be a huge potential for rapid growth of the Chinese economy. If you look around China, in fact, you can see this very clearly. In the southeast part of the country, the Yangtze River Delta and the Pearl River Delta, the economy is doing almost perfectly fine, where the market is functioning very well and entrepreneurs are very dynamic. The areas where the Chinese economy is seeing huge difficulties, Northeast China, Northwest China, these are the places where the state-owned enterprises dominate, and most of them become zombie firms, and the government doesn't know what to do with it. So I think the story is very clear, the solution is very clear. The question is, can we find out a politically and economically viable approach in resolving these zombie firms?
Anil made a point I hadn't thought of, and I think and you said the same thing, and I guess that is the answer, that when you have a lot of default prospects of default, the capital goes to the wrong place, and then you get exactly the problem you just described. Yeah. But then, and my answer had been, well, you can send people to jail who borrow, but as you say, that gets a little bit complicated. So maybe that doesn't work. But then how do you remedy this? And does the trade conflict make it more difficult to remedy it? Because that's a negative factor with respect to growth, and maybe that makes it more difficult to deleverage. That's a question, not a comment.
I think it's more than just sending the managers of bad companies to jail. The question is like, if in Northeast China, in one region, the bad SOEs dominate. And if you want to do something, the first question is, well, what are you going to do with these redundant workers? You're going to send them. Number two, if GDP disappears, what is the local authority is going to do? And then number three, because they don't have a lot of industrial companies and the numbers exist, already have very bad problems. If you want to shut them down, it means the whole region would probably go down. So two questions often a policymaker would ask when you talk to them about resolving a zombie firm. Number one is the people. Where will people go? Number two is money. Where will money come from to resolve the bad debt?
Well, that has to come from Brad?
I was going to make a couple of points here. The first is, and I think the difficulties with some provinces illustrate this, is that China still doesn't have a complete internal labor market. So it is hard for people to move from declining coal-based provinces to the more prosperous parts of the country because of the hukou household registration system, because the social insurance system is not fully national. So there are steps that policymakers could take that would facilitate some of the economic adjustment. The answer for who bears the loss has to be the government, and it has to be the central government, because the provinces don't have the financial strength, particularly the weaker provinces. And I think that gets at the potential difficulty inside the Chinese financial sector. Traditionally, the most credit came from the big state commercial banks, which are all owned by the central government. And they mobilized deposits nationally, lent nationally, and responsibility for backstopping their lending was clearly rested with the national government. Some of the fastest growing banks now are city commercial banks, which may be backstopped by a weak city, or banks where the ownership is more opaque but includes a lot of provincial governments. And so the question of what level of government bears responsibility has become more difficult. I think it's resolvable, but it creates a little bit more uncertainty. And then there's additional uncertainty because a lot of the financing that the banking system has raised hasn't come through formal deposits. It's come through what are called wealth management products, which are shadow deposits, which in principle aren't guaranteed, but most people think are guaranteed, and which never seem to have major defaults. But there's at least a risk that the banks that sponsor the wealth management products might conclude that it costs too much to stand behind them and jettison these savings vehicles. And that could cause parts of the financial system to seize up. As part of the deleveraging, there's been a push to reduce reliance on these products, to bring things back into the formal banking system. But that's created some of the problems that Yiping has mentioned.
Yeah, the other thing about Yiping's point is, if you look at the income ratios or the consumption ratios between the wealthy and the poorer parts of the country, they're big, on the order of three times. So why does anyone want to stay in these dying or struggling regions if they could move freely? Well, they wouldn't. So that's why I said this personal freedom and economic freedom go together. If you open up the forces of change where people can migrate without many constraints, it's going to be chaotic. People are going to move away from these depressed areas, and it'll be hard to control. And so treading that line is a real challenge. And the risk is the way they prevent it is just pumping more credit in to keep things stable, keep the lid on it, but then that creates a bigger imbalance in the future.
Anil, you're a, I'm sorry, do you want to say?
Well, I just want to say, I think your points on people moving to other places, I think it's a valid point, and I also agree that the household registration system probably should be substantially reduced, if not abolished. But migration, I think, in terms of mobility, labor mobility is happening quite significantly. Yeah. The reason why many people choose to stay in these almost dead areas with the economy not lively, mostly older people. So for instance, you go around, you find if young people coming from this region, they graduate from universities, almost none of them want to stay in that region. They all go to the southern part of the country. That probably part of the reason why the economy is not very dynamic. But also because these old people they worked for SOE for 40 years or 20 years. It probably will be number one, the transaction cost for them is quite high, moving to a new place. And they're not sure if they can get a decent job in another area. And of course, finally, even though these jobs are not very good, but you still have some kind of guaranteed pay from the government and so on. So I think it's a result of a mixed number of factors.
Anil, you're an expert in financial systems. What would your guess be as to the probability, if you now take this as our framework, that this can all be done in a manner that works relatively well versus the possibility that in one fashion or another it becomes fairly disruptive, if in no other way, just that it greatly reduces productivity and therefore growth, and that creates social instability, et cetera?
I mean, if you'd asked me this question 5 years ago, I would have said they probably wouldn't make it 5 years. If you asked me 10 years ago, I would have said they wouldn't make it 5 years. So, you got to be frank here. They're way past when anybody thought that they could pull off with, 40 years of no recession growing at 9%.
Right.
So you got two factors. If you're, Bayesian updating, you say, well, they've done it for 40 years, they'll do it for 45. But if you compare to the rest of history, it doesn't look so great, especially with the aging and all these other things. So I think it's going to be a challenge. I don't think there's going to be some supreme moment of collapse, but I think they could grind down the growth if they're not careful, and then things will look much less favorable. I think you've got to put substantial weight on that. I don't know if it's the base case, but it's a real risk.
As I said, I think we should look at China not as one single economy. It's actually a different set of economies. So for instance, we talked about the middle income trap question. But if you look at the coastal region, like from Tianjin to Shanghai to Shenzhen, the whole region is already a high income economy. So it's not really an issue, I think. The problem is much more like in certain areas, the western region, northeastern region, that is a bigger problem. So my guess is if we can continue to support the East Coastal region continue to rise as they are doing, and trying to work out some of the issues. Even if, I think Brad made a very good point, which I also agree to. The central government probably should take greater responsibilities to some of the masses or financial masses already created in these regions, and just say, well, the government will assume some responsibilities, and let's start from there. That's exactly what the government did in the late 1990s.
Yiping, is there a willingness on the, this is sort of a related question, but maybe we've covered it to some extent, but is there a willingness right now on the part of government to allow failure to happen? And secondly, is there the equivalent of our bankruptcy system? In other words, we have a whole set of laws that provide you ways to reorganize and keep the business going, but change and so forth. My impression is China doesn't have an analogous system, though I could be wrong.
I think there is a willingness for some failure to happen. because they're always talking about for the past couple of years that we should release some of the risky spots, because if we don't release the pressure now, it will blow up one day sooner or later. So I think at that point is quite clear, and in fact, the authority is trying to deal with the problems in all different areas. The shadow banks you mentioned earlier on, the local government borrowing, the fintech industry, and so on, they're all doing it. The problem is when you come down to like really bankruptcy a company. My own view, my own impression was, I'm not a legal expert, so I have no idea. The bankruptcy law is there. But implementation lags quite seriously. So this is causing a problem. And the government's preferred approach is not outright bankruptcy, but restructuring. So a failing company will be taken over by another company and so on. But there was a byproduct from the central government squeezing on local governments borrowing massively from the market, because that local government liability is rising so quickly, it became a big problem. So now the central government is trying to constrain the local government's capability of borrowing. One unexpected result was now the local governments are more willing to let some of the local loss-making SOEs to be privatized, because they don't have any resources to support these loss-making SOEs anymore, and they have to let it go.
Has there actually been a privatization process amongst those?
Taking over by some private investors and so on. We have seen, it's not like a widespread phenomenon, but we are seeing an increasing number of cases.
They picked the low-hanging fruit a number of years ago. If you look at, one of the great things about China is they have statistics like what he was just quoting, loss-making SOEs. Right. You can just look at the national statistic and count the numbers, and what you see is the numbers are shrinking, but the number of people employed are not falling nearly so fast. So they cleaned out all the little ones, and I guess the thing I don't know is, the last time I looked at this, it was still the case that your health care and your pension was tied up with your employment. So one of the, looping back earlier to the consumption savings thing is...
Also goes to mobility questions.
Yeah, and if you close down this SOE, what happens to their pension? Who deals with their health care and all of that? So, I mean, if it was easy, they would have done it.
I mean, there's also this, going to your bankruptcy question, sort of a conceptual question. If the biggest creditor of a state enterprise is a state commercial bank, the bankruptcy process would involve transferring ownership from one part of the state to another part of the state.
Right.
And my sense is that that's still, with some exceptions, an accurate description of many key parts of China's economy.
Let me ask a totally different question, and maybe there's no way of measuring this, but does one have a sense that the management of the SOEs, as compared, say, to whatever period you want as your baseline, the management has improved, has deteriorated, or stayed about the same?
Well, if you look at recent years, and if you look at, for instance, the SOEs today compared to 20 years ago, they're massively better. Okay. Massively better, partly because in the late 1990s, we actually had a de facto privatization wave, and 500,000 loss-making SOEs disappeared within a couple of years. So the only ones left are bigger ones. But last few years, I think the SOEs got into troubles again. But you read the recent data, profitability and margins actually improving. Probably partly contributed by recovery of the commodity market, because they concentrate in the resource sector.
Yiping, you might not want to answer this, but let me see if either of the other two know the answer. One reads in the press, at least, and one hears from people who do business in China, that the role of the Communist Party is now increasing in the conduct of business in China. We will ask our two guests to answer that. Do you have any sense of that, one way or the other?
I think that sense is well-grounded. It shouldn't really be a surprise, since President Xi has made the strengthening of the party and the institutions around the party a central part of his broader approach to governance. So I think there was a sense that the party machinery was also growing in importance in economic governance relative to the traditional institutions of the state. And I think there is certainly a sense that even the private companies now need to be on the, I'm going to get the phrasing wrong, but the right side of the party. Make sure that there's a party committee, that kind of thing.
Maybe China is different than the United States, but if our politicians were deeply involved in the management of American business, I think that wouldn't necessarily be the world's most constructive step. I think we have just one factual question. When does the working age, no, is that right? Yeah, that's right. When does the labor force in China start to decline?
The working age population is already declining. At the moment, like we're losing something like 5 million workers every year. Compared to 20 years ago, the labor force was like growing by 8 million. So that's actually comes back also related to the point we're making earlier on about how do we deal with the SOEs, redundant workers, and so on. I actually think at the macro level, it should be so much easier now to deal with this much smaller labor force with the state sector, while the overall labor market condition actually is much, much more tight. So one thing I think surprised many economists and some officials is that after the global financial crisis, growth has been decelerating steadily. Everybody expected the unemployment rate to show up, but it didn't.
Okay. I'm going to be fired unless I obey. What am I supposed to do now?
Q&A.
Oh, okay. I'm supposed to do Q&A. Here you go. And then we're going to do just like the last panel did. We're going to end with a question that you can only answer with one word, and I'll give you 3 choices of words. Okay. How likely? Oh, that's good. Yes. How likely is there to be a housing price decline in China, and how significant would that be were it to occur on the economy?
I'll start. I'm sure others. I think there is a little bit of evidence now that the housing market is weakening. That the wave of construction and wave of demand that was created in part to pull China out of its last, what you might call a recession by Chinese standards. So there was a growth slowdown in 14 and 15, and in response, mortgage credit was liberalized. There's been a big increase in household borrowing, and I think there's now evidence that sales volumes are falling, and that's one of the reasons why there's a range of indicators suggesting that Chinese growth is now decelerating. I doubt that will lead to an outright fall in home prices. I think the authorities have strong incentives to avoid that outcome. But I do think this is an important concern, in part because China's domestic economy may well have been decelerating right at the time when the U.S. is ramping up its trade pressure. And that adds to the policy challenge that Chinese leaders now face.
Here's a really interesting question that I must say I've never thought of before, but I don't think there's ever been an economy in history that hasn't had recessions. When will China's first recession happen? Or is it possible that China has developed an economic model and conditions such that we'll never have a recession? Never within some foreseeable future.
So, all these countries that go through transitions, many of them starting with Japan. Japan averaged 9.9% a year for 20 years, okay? But they still claim they'd have growth recessions when they'd slow to 3 or 4 for a quarter or two. So if you're asking at what point will they have a good old-fashioned U.S.-style recession where GDP drops, it could be quite some time, but that won't change the way it'll feel on the ground in China. If they were to slow to 1%, the people would be panicked.
Or 3%, one would guess. Or something.
I guess China will have a recession when the leadership abandons its growth target.
That's a clever answer, Brad. Would you like to answer? You don't have to if you don't want to.
No, I agree.
You agree with which comment?
I agree with Anil. I think.
Okay.
Growth. We already. If you talk about a growth recession, we're already in the growth recession.
Yeah.
Growth has been decelerating since 2010, and we still don't know if we hit the bottom yet. So I think that will continue to go down. But you look at the momentum of the economy, as I said earlier, innovation, new industries coming up, and that probably can support growth for quite a while. So I don't know when we will see a true recession in China.
I want to make,
I mean, for all intents and purposes, I think China, this is my own personal opinion, China had a recession in 2014 and early 15. Import volumes were basically zero, which strikes me as a reliable indicator of the pace of activity.
yeah, but what was the reported rate of growth and what was the actual rate of growth?
Reported was around 7. I think the actual rate of growth was more like 3 or 4.
3 or 4. Okay, and so now they just announced, I think a week or two ago, I don't remember, 6.5% growth. What is the actual?
I would say about 5. But I think over the past 2 years, China actually has had fairly strong growth. So I think there's been a deceleration from a period when the official growth number was pretty close to the real number.
Okay. I don't own a watch, so are we at the end of our time? Because I want to ask one question. No. Okay, we can keep going. Well, we've done this, I think. Okay. I don't like that one either. If you look forward 5 or 10 years, and you think of the attitudes in the United States and China toward trade, do we think we're going to have a more protectionist global trading regime, or do we think we'll continue to have the kind of relatively open trading regime that we've had for now a long time?
Can I ask you a question I've always wanted to ask you? If we go all the way back to NAFTA.
I thought I was going to, okay, yeah.
You know, but
Yep.
you're uniquely positioned to answer this question.
When anybody says that, I get very wary, but go ahead.
But to get
Brad was there with me, so if I can't answer, maybe he will.
To get NAFTA through, we made this bargain that said NAFTA was going to be good for jobs. Economists would have never led that way. We said it would be good for variety, consumption, specialization, but would have never. And that was when we really tied jobs to trade in a way that I think has morphed into kind of this toxic zero-sum view of trade. Do you have you ever thought of what would have happened if we let NAFTA go down and forced businesses to come and make a better argument instead of tying it to jobs? I've wondered about that. I mean, NAFTA's been a great thing, but it came at a high price in terms of the political rhetoric.
Look, it's a good question, Anil, but I don't think that the politics of trade, look, technology is going to, I think the next thing to worry about, this is my view, I don't know if anybody else agrees, and probably I'm wrong. As Michael said, I'm a retread lawyer, not an economist, but I think the risk now is that at some point the focus on trade as being a pressure on jobs and wages will turn to technology. Because that, after all, is where the real pressure comes from in this country. Yeah. And I think it is vitally important that we have the kind of market-based economy. Therefore, we should have this gets into a whole different subject, we should have an inclusive growth. And you have the same problem, I think, over time. Sure. Inclusive growth policy regime that promotes growth and widespread distribution. In terms of NAFTA, I think if we let it go, it wouldn't have come back. We only got it, truthfully, we only got it by building bridges all over America. And that's how NAFTA got passed, not by anything else. Let me ask you this, but I want to go back to the question I just asked. Given that China does have a whole bunch of, we discussed a little bit, albeit not much, a whole array of structural issues that are serious issues. And the question is, are we going to continue to have our market-based economic policies, or will we adjust to that, and will we become less market-based and more industrial policy? It goes enormously against our concept of what works economically. But if you look at 5 or 10 years, you think we'll have a more restricted kind of global trading environment, less restricted? Is it possible there'll be 2 regimes, one built around China and one built around the United States?
That last question is one a lot of people are asking, in part because of the provisions in the USMCA, the new NAFTA, that say more or less you can only have a free trade agreement with the US if you don't have a free trade agreement with a non-market economy, which would imply over time a bifurcation of the global trading system. And I think that's maybe not the baseline, but it's a reasonably high probability outcome. I think 5 to 10 years from now, we will have a slightly more restrictive system. I think that's in part going to be a reaction to China 2025 policies. If China doesn't want to import US aircraft, there's going to be less trade by definition. And I think there will be some level of restriction. Whether it's going to be 25% sustained over time, I have some doubts. But I don't think we're going to go back to a world where, broadly speaking, there is a global set of rules and China is accepted as a normal player within those rules.
Does anybody think the WTO is still going to be relevant 5 years from now?
Well, I think certainly China would have a very strong interest in maintaining that regime.
A WTO regime?
Yeah, WTO multilateral system. In terms of net contribution to GDP growth, I think the trade's role or exports role is probably declining because it's a very large economy and should gradually make the economy somewhat more domestic demand oriented. But I think the policymakers realize that openness is really the key to the success in the past and probably will be the same for the future. And to some extent, this is the reason why they want this Belt and Road Initiative, because the developed world might be slowing down and you want to new areas of cooperation. So I think dependence on trade's contribution to GDP growth will continue to go down, maybe stay at a very low level. But I think the importance of exchanges of capital, of ideas, of people, and the technology, I think will be much more important. The second point, I think we should also take a look at the Chinese policy changes. And Brad said, well, if China does this, and the people would feel very suspicious and so on. I agree. But you look at the list of some foreign countries' demand of Chinese policy changes. Number one, better protection of intellectual property rights. Number two, opening the service sector. And number three, increase the role of the market in allocating resources. If you guys have a chance to read the government's policy documents, these are exactly what the government planned to do. Yeah. So I think not personally, as an academic, I would say, well, the government has been implementing these policies slower than I had wished. But I think this tension itself might not actually be a completely negative thing. Actually would force many people in China start to think, well, should we accelerate the reform or should we actually just turn inward looking? My sense is I think we probably will see faster reform. Even if our trade war with the US intensifies, we still want to have better trade and economic cooperation with the rest of the world.
Yiping, what does socialism with Chinese characteristics mean? That's a phrase.
As an economist, I don't pay too much attention.
But it is how they describe themselves.
Bottom line is, I certainly don't think China is a very ideological country.
That's my impression.
In that sense. You compare even during the central planned system period, you compare China with the former Soviet Union, it was a very different story. So socialism, in my sense, probably in economic area, represented by the two factors I mentioned at the very beginning. A rule for SOE in the economy and some government rule in the economy. But I think it's not impossible to make these actually more or less in line with the market rules. The SOEs, for instance, as I said, you have SOEs in other countries, and the government is now talking about competition neutrality. If competition neutrality is really something the government is going to enforce, then we probably should pay less attention to the ownership itself, per se, because it's much more important for them to just play on the level playing field. The second is the role of the government. And I think we're also seeing the discussion and the debate. What is the best rule for the government? The best rule for the government is to overcome market failure. Probably would be a bit more than what we see in North America or in Western Europe. But think about what Japan and Korea did.
Can I just throw out a quip? I think socialism with Chinese characteristics doesn't seem to involve a whole lot of what Bernie Sanders would describe as democratic socialism. It does not seem to involve taxing income in any substantial way. It does not involve taxing property. China still doesn't have a property tax. It does not involve transferring income to the low-wage part of the population. And it doesn't seem to involve providing high-quality public health insurance to all, given the low level of public spending.
That's very good. I'll give you one comment and then we'll wind this up. I heard a little bit of the prior discussion when we were talking about the Thucydides trap, one thing and another. I think the tragedy of our situation right now is that at the leadership of our country, we have an animus toward China, and I think it's massively important, massively in our self-interest to have an effective relationship with China. And I don't know enough about China to know what the view is at the top there, but I've always had sort of the impression that this is a relationship that doesn't have to be a Thucydides trap. This is one that can work together. And I think you're coming here from Beijing, for example, to explain a little bit of what's going on in China is the kind of thing we need to do just on a vastly greater scale. Okay, here's my question. You only can give one word. If you were making an investment decision today, would you substantially allocate, looking out 10 years, would you substantially allocate toward China? And you can answer yes, you can answer no, or you can answer too complicated to have a simple answer. Anil?
No.
No. Well, that's interesting. Brad?
No.
No. Oh, wow. You don't have to answer.
Yes.
All right. Well, that is really interesting. Wow. Okay.
What would you say?
Well, to me, everything's too complicated to make sense. So Tim Geithner used to claim that I was the world's leading expert in optionality.
That was terrific. Really good.
Thank you.
Yeah. So that concludes the day. You guys, you don't have to get up yet. We're going to do the closing remarks. Kudos to the organizers of this conference because, as you can see just from this panel, the level of discussion is fantastic. The quality of the people, the high level, the quality of the people coming from China. Ditto to what Secretary Rubin just said. It was so great to have you travel here. We are looking forward to seeing you back here tomorrow. Another eventful day. Everything begins at 9 a.m. Don't be late. We're going to have a great opening panel. Please be on time. And also, please think about the environment. So please bring back your program so we don't have to give you a new one. Okay? And then you can go out to the Hutchinson Commons for a reception, which is going to be held right out there. Okay? Thanks.